Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
Good morning, everybody. Welcome to Friday Finance edition of Wealth Coffee Chat. Glad to be joining you guys on a rainy Friday in Sydney. I hope the weather's great where you are. We are only 3 weeks away from the Property Summit. So if you haven't got your tickets, get them in now. I will drop a link in the chat. If you're looking to elevate your understanding of the Australian property market and the strategies involved in creating lifelong wealth through investment, you need to be at this event. We will have some industry acclaimed guest speakers and also our expert 6-star team as well at the event. Great opportunity to network with like-minded people and talk about what is going on in the world of investing. Again, like I said, I've dropped the link into the chat in regards to how to get tickets. Tickets actually running out very quickly, so jump on as quickly as you can. Here is what the event was like last.
All right, this is going to be fun. Who has played the property game before? Who has been in the game? Who's never played the property game before? Oh, you're in for a treat. Who likes Monopoly? Did anyone like Monopoly when they were a kid? Well, this is Monopoly in real life, in this room. Every hour or so, you guys are going to be up and you're going to be running around the room like maniacs trying to play the property game and win the property game.
Today, I wanted to share the lessons, the mistakes, and the wins.
I want everybody to put up their hands who knows their interest rates on all their loans right now.
If you haven't seen me around before, like 13 years in the industry, in property management specifically.
Who likes paying tax? If you need help finding somewhere to donate, I'm sure I can find somewhere else where it can go.
No, we've got an expression in that, let's go and make new mistakes in the world. Who wants to make new mistakes?
These are just strategic moves that can make such a big difference.
So obviously buy well, never sell. Definitely the majority of what everyone's looking to do is collect some A-grade assets, B-grade assets, whatever it might be.
I loved the idea of being a property investor and developing that identity.
Collectively, they have way more years experience in everything that you think you're trying to solve. Because they do it every single day.
I'll take you higher. No, you're not dreaming.
I'm really excited to see all those who will be at the event. Why are mortgage brokers bad at poker? They always disclose their hand. Hi, Kevin. Thanks for joining. Jeff and Justin, thanks for joining me this morning. Celebration this week, everybody. The RBA met on Tuesday, and the interest rates, they've cut interest rates by 0.25, not the 0.5 that some of the economic experts from the banks thought it would be, but it is a rate reduction. Now, what I've also heard is that not all lenders are actually passing on the rate reduction. We did get a list of a few lenders a couple of hundred lenders that weren't going to pass that on. So what do we do now that the interest rates have come down? You will be getting an email from your lender over the next couple of days, or you would have actually received them already, to say that the rate will be reduced, and they'll also let you know when your particular rate will be reduced as well. As I said a few Wealth Coffee chats, this is a great time for us to reach out to our brokers and our lenders and start negotiating the rates that you currently have, and compare that to what they're potentially offering for new to bank clients, and going through the negotiation process, which is get your brokers to reach out to your lender, you reach out to your lender, and then you request a discharge form from the lender as well, because that will squeeze the bank, and it'll trigger their retention team to contact you and negotiate your interest rates. It is a negotiation. Once you have that, you get your broker to compare that to what is available in the market, and if you're in a position to potentially refinance to a better rate because your existing lender won't meet the interest rate that you would like to get, then go through that process. Arm yourself with some knowledge through your brokers, so that you know what interest rates you would like to get to and who's offering them, and then get your banks to match that as closely as possible. If it's within 0.1 and 0.2%, I'd usually get my clients not to refinance, because we don't want to go through the headache. But in saying that, we'll run through some things today just to get an idea of what we should be doing now that interest rates have come down, because it's a great time to not only review rate, but take a look at your equity position as well. The other thing I want to remind everybody is that not all repayments will actually get adjusted. So not all lenders will adjust repayments. Now, if you've been able to make your repayments fairly easily, then there's nothing wrong with continuing to make those repayments, because it now means that the interest portion of your loan is reduced and the principal portion of your loan is increased. Now I'm talking about your home loan and you're paying principal and interest. So what you can do is Adelaide Bank have a calculator, and you can actually go in there and put in the monthly repayments, the interest rate, how long you've got left on the loan, and it will give you a picture. It will give you a graph of how long you've got left to pay off your loan, and then you can make some adjustments to actually go, if I continue with my repayments, how much faster will I pay off my home loan? And now, majority of loans are variable, so if you're paying more into the loan, then you will be able to access the money through redraw. Double check that, okay? Make sure that that is actually correct, because not all lenders automatically have that money as redraw. I've spoken about offset accounts, so if you want to take a look at offset and how that's going to help you, pay off your home loan faster, then just go back through my previous Wealth Coffee chats. Now, what to actually do now? Thanks, Courtney, for joining me. Morning, Pat. Morning, Chris. I'm just gonna run through some numbers really briefly with everybody, and I hope everybody can see my screen here. So firstly, what we want to do is on your home, okay, we want to check the value of your home. Now, you can check your values. There are websites that are available that give you a rough idea of the value of your property. Most brokers have access to property reports. So we are actually able to get you a property report. It's not a valuation, but it's very, very close to it. So now, if you, once you've either got a property report or you've checked on these websites and say your home is worth $1 million and your current loan is 500,000. Okay, so your actual equity is 500,000. However, when it comes to lending and it's the available equity you can use, we usually look at 80%, especially when it's against your home and you don't want to sort of go into mortgage insurance territory. This means that available equity is only 300,000. Okay, so this is what you can access. Now, what you want to do is you want to add that with your savings. So say you have 100,000 in savings. You now have about 400,000 that you can use to look at when to purchase your next investment property. So just to give you a rough estimate of how much you could purchase your next property for, you multiply this for 0.25. Now, the reason why we multiply by 0.25 is 20% as a deposit and then 5% for stamp duty and costs. Okay. So if we did that rough number, being a finance guy, I've got to use a calculator. So it's 400 divided by 0.25. Oops, 400 divided by 0.25 is 1.6 million. So that's how much you can purchase a property for. The loan on that will be 1.2 mil, which means this becomes a question that you sit down with your broker to go, how much income will I need to take out a loan of 1.2 mil? So the next part, and I'll give you some really rough numbers, which we can calculate off the top of our heads. When we look at servicing, when we look at income, we are looking at wages. We are looking at bonuses. Now, if you own your own business, we would look at the wage you pay yourself, the profit from the business, and any depreciation. Now, these are obviously rough, but it will give you an idea of where you're at and accelerate your conversation that you can have with your broking team. So wages, bonuses, overtime, rent, if you've got investment properties. You take all this and you multiply it by 5, and it'll roughly give you how much you can actually borrow, and then you minus all your liabilities. So your current home loan, all your current loans, credit card, and any personal loans. Super rough estimate, but when a client has a chat with me over, if I'm out and I'm not sitting in front of my computer, this is the rough estimate I give to them, and then we go and we verify all this information and we look at all the different lenders. But I wanted to share that with you because, again, now is a great time for us to reach out to our lenders and review our actual interest rates and see what the interest rates are. But it's a great time to go with what's our equity position and what's our income position. What I want to remind everybody is that when it comes to borrowing, you borrow when you can. Now, if this year you've got a great bonus and you've got some equity in your home, arrange to access that equity. And then if it's in an offset account, leave it in the offset account and save it for when you actually need to use the money. If it's set up correctly, it actually won't cost you anything until you actually use it. Now, if you wanted to look at the interest rate, and interest-only rates are a little bit higher than principal and interest rate. But if you're taking equity out just to park the money, then the interest rate actually doesn't matter if you're not using it. But what can happen is when you're ready to use the money, you can change it from an interest-only to a principal and interest if we're really worried about rates. Or you could just leave it there because most of the time it will be used for investment, which means that the interest will actually be, you can actually negatively gear the interest, which will help you save on tax. So that will be a question that you want to sit down with your accountant and run through. But what we want to do is make sure that if we're getting a lot of overtime and we're getting a lot of bonuses, or we've had a great year in our business, that we want to actually unlock equity and have it there available for us to use as soon as we can. Thanks for joining, Marianne. So I just wanted to share that. It's just some rough numbers, but reach out to your mortgage broker and have a chat to them, because now is a good time as any to review your current financial situation and see if you can put yourself in a position or prepare yourself to actually purchase your next investment property. All right. Thanks for joining me this morning, everybody. Hope you have a wonderful Friday. Enjoy the rest of your weekend. Just again, a quick reminder that we are only 3 weeks away from the property summit and tickets are running out super quick. So I will drop the link to purchase the ticket, to purchase tickets in the chat, and I will see everybody next Friday. Have a wonderful day.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.